Level 1. $0, $8 in your account, and a card in your hand at a gas station at 11:52 p.m. You put in $10 of fuel. The card declines. The guy behind you shifts his weight. You say something about your bank being weird, and you tap the card again, like the number might change if you try harder. It doesn't. You pull out $6 in cash, and you buy what $6 buys. The next morning there's a notification. $34. Overdraft fee. Something posted overnight that you forgot about. A subscription. $4. The bank let it through, covered it, and charged you $34 for the favor you didn't ask for. That's the part nobody explains. The bank could have declined it for free. It chose the fee. Not because it's evil, because that's the product. You are not a customer here. You're a revenue line. Then it happens again on Thursday. 2 fees. $68. You do the math standing in your kitchen. You are now working an hour and a half to pay for the crime of having no money. The fee for being poor is more money. You call. You wait 11 minutes. A person with a kind voice tells you they can refund one as a courtesy, this one time. You say thank you. You mean it. And something in you flinches at how grateful you just were to get back money that was yours. You close the account before it goes negative again. That closure goes into a database. Every other bank in the country can see it. You don't know that yet. You'll find out in 9 months when you try to open a new one, and they say no without explaining. So you cash your paycheck at the place with the neon sign and pay 3% to touch your own wages. At 0, the bank isn't a service. It's a toll booth on the road you already can't afford to be on. Level 2, $500. You're back inside. Basic checking. A card that works. The monthly fee is $12. Waived if a direct deposit hits every month. Read that again. The fee waiver is conditional on you having a job. The bank has priced your employment into your account. You deposit a check on Friday. It doesn't clear until Tuesday. Your money exists. It cleared their end. They have it. They just haven't given it to you yet. And for those 3 days, they're using it and keeping what it earns. Not from you specifically. From 40 million people at the same time, every day, forever. You don't get charged here. You get charged in time. And because you're at $500, you have no leverage, so you don't object, so you adapt. You learn the exact hour deposits post. You learn to schedule rent against it. You build a whole second calendar in your head around a delay that exists because someone decided it should. You still check the app every morning. Not panic anymore. Habit. The panic trained you, and now you can't stop. The first rule. Below $1,000, the bank isn't taking your money. It's taking your timing. Level 3, $2,500. The mail changes. Pre-approved. Congratulations. You qualify. A credit card with your name printed on a plastic sample in the envelope. You didn't become more trustworthy. You became more profitable. You read the offer. 0% for 12 months. Then 27.99%. The 27.99% is in a font you have to squint at. And the 12 months is in a font you can read from across the room. And the difference between those two fonts is the entire business model. You take it. Most people take it. You use it correctly for 4 months. Then a tire goes, and you carry a balance for the first time, and you tell yourself it's temporary. It's $600, minimum payment $25. Here's what that number means. At $25 a month, that $600 takes you 31 months and costs you roughly $250. You have paid $850 for a $600 tire, and you have not done anything wrong. You made a payment on time every single month. Nobody lied to you. That's what unsettles you. Every number was disclosed. You just weren't standing in a position where the numbers meant anything. The second rule. At $2,500, the bank stops charging you for what you don't have and starts charging you for what you can't wait for. Level 4, $10,000. 5 figures. You screenshot it. You don't send it to anyone. You move most of it to savings because savings is what you're supposed to do. The rate is 0.42%. On $10,000, that's $42 a year, $3.50 a month. Then one night, for no reason, you look up what the bank charges to lend money out. Auto loans, 8%. Cards, 24%. Mortgages, 7%. You sit with that for a second. They're paying you $42 to hold your money and lending that exact money to someone else at $800 a year. The gap is not a fee. Nobody itemized it. Nobody disclosed it. The gap is the whole business, and it has been the whole business since before your grandparents were born. At $10,000, you are not the bank's customer. You are the bank's supplier. You are providing raw material to an operation that sells it back at a markup to people who are exactly where you were 3 years ago. You don't feel angry. You feel something colder. You feel like someone who's just noticed a room has a two-way mirror in it and is trying to remember what they've done in that room. You move the money to an account paying 4%. It takes 6 minutes. Nobody stops you. Nobody calls to ask why. That silence tells you everything about what you are worth to them. The third rule. At $10,000, you stop being a cost and start being inventory. Level 5, $50,000. A human being appears. Someone from the branch calls you. They have a name. They have a title. Nothing's wrong. They just want 20 minutes to make sure you're getting everything you're entitled to. Entitled to. You notice the word. You were entitled to it last year too. The fees stop, not all at once. Quietly, one at a time, with no announcement. Maintenance fee, gone. Wire fee, waived. Somebody says the phrase relationship pricing, and you nod like you understand it, and later that night you look it up and understand it completely, and wish you didn't. Relationship pricing means the price was always negotiable. It means every fee you paid between $0 and $10,000 wasn't a cost. It was a price. And prices are set by whether the seller thinks you can leave. You couldn't leave, so you paid. You can leave now, so you don't. Nothing about you improved. Not your character, not your judgment, not your reliability. You are the same person who overdrafted at a gas station at 11:52 p.m. The only thing that changed is that the machine measured you again and got a different number. The fourth rule, at $50,000, the bank stops charging you and never explains why it ever did. Level 6, $250,000, $250,000. There's a line here you can't see, and the bank can. $250,000 is the federal insurance limit. Below it, your money is guaranteed. Above it, you're exposed. And for the first time, the risk in this relationship runs in both directions. They know the day you crossed. There's a system that watches for it. You get invited into a tier with a color in its name, a dedicated advisor, a phone number that a person answers on the second ring instead of the 11th minute. Then the pitch. 1% a year to manage it for you. It sounds like nothing. It is $2,500 a year, every year. Whether the market goes up or down, whether they do anything or not, compounding against you for 30 years, the same way your money compounds for you. You spent your whole life below this line, getting charged $34 at a time. Now they want $2,500, and they'll buy you lunch to ask. You say you'll think about it. The advisor is genuinely nice. That's the part that's hard. He isn't a villain. He believes in the product. He's just standing at a specific place in a machine, holding out a hand, and the hand is real even if the machine isn't kind. The fifth rule, at $250,000, the bank stops selling you accounts and starts selling you advice. Level 7, $1 million. The machine reverses. You want $200,000 for something. At every previous level, that meant selling something you own and paying tax on the gain. Here it doesn't. You pledge your portfolio. The bank lends against it at 5%. You don't sell, so you don't trigger tax, so the assets keep growing while you spend borrowed money that's cheaper than the growth. Sit with the shape of that. At level 1, you borrowed $34 against a $4 subscription at a rate that has no honest name. At level 7, you borrow $200,000 against stock at 5%, and they thank you for the business. Same word, loan. Two completely different objects wearing the same word. The poor borrow money and pay for the privilege of being risky. The wealthy borrow against collateral and get paid in tax deferral for being safe. Nobody hid this. It's on the website. It's just written in a room you were never invited into. You feel a thing you don't say out loud. You are now being rewarded in cash for having already won. The sixth rule. At $1 million, the bank stops lending you money and starts lending you leverage. Level 8, $5 million. The rates disappear, not the rates themselves. The published ones. There's no sheet, no laminated card by the window, no page on the site. Everything is quoted. Quoted means negotiated. Negotiated is a service extended only to people the bank cannot afford to irritate. You get a mortgage below what the bank pays for its own deposits. The mortgage isn't the product. You are. They're pricing the relationship and losing money on the loan on purpose. You don't go to a branch. Someone comes to you. Someone calls before a change instead of after. And you notice the thing that reorganizes how you see all of it. The hold on the check, the overdraft that posted overnight, the denied application, the fee that couldn't be reversed because the system won't let me. All of it felt like physics, like weather, like a wall. It was a setting. It was always a setting. Somebody with a title has had a hand on that dial the entire time. And at $5 million, they'll move it for you on a phone call while you're driving. You don't feel triumphant about this. You feel something closer to vertigo. The seventh rule. At $5 million, you discover the rules were never rules. Level 9, $25 million. You're not a customer anymore. You're a counterparty. Banks compete for you now. 3 of them, actively, each willing to lose money on parts of the relationship to keep the rest. You get shown things that are never advertised because because by the time a thing is advertised, the allocation is already gone. Your money stops sitting in accounts. It moves through structures, entities with your last name and a lawyer's number attached. Words you'd never heard at $0 now run your Tuesdays. And the inversion finishes itself. At level 1, the bank's balance sheet was a wall you pushed against and it didn't move. At level 9, the bank's balance sheet is a tool you use, and there's a person whose quarterly review depends on whether you're happy. The distance is the strange part. Not loneliness, distance. The people who knew you at $8 can't see this. You can't explain it to them without sounding like a different species. So you stop trying, and the not trying builds a wall neither of you agreed to. You give more than you ever have, not for reputation, because at this level, giving is one of the few things that still feels like it costs something. The 8th rule. At $25 million, the bank doesn't serve you. It reports to you. Somewhere right now, it's Friday, and a man is standing at a check cashing window in a strip mall. His paycheck is $612. He hands it over. He gets back $593. He counts it in the parking lot, carefully, twice, and puts it in his front pocket instead of his wallet. He thinks this is a story about banks. It isn't. The bank isn't cruel. Cruelty takes attention, and the machine isn't paying any. It reads one number and responds 40 million times a day. No memory, no malice, no exception for the fact that the number is attached to a person who is tired. That's the thing about money. It never decided you were worth less. It just told everyone how much of you they had to notice. The number was $8. It's always $8 at the start.